All right, well, let's see.
Then we meet again, huh?
Here we go again. That was a month ago. That's okay.
Not,
First of
not
all,
well.
can you guys hear us well? Everything's fine? Or let me open also I'll open the chat. Probably that'll be easier. Who can chat or yeah. Okay. Oh, we just have only the Q&A, not chat. Okay. Uh, yeah, all is okay. Perfect. I'm just gonna fix one more thing just to make sure we're all good to go. There, I just opened the chat also for everybody and said if you don't want to,
Okay, I think Isa already answered that, and I think they can hear us. All is okay.
yeah, I mean
Okay,
they can put in the chat now if they want, instead of a Q&A. But also if you have any question, you can drop it there.
so how was your weekend?
Weekend, nothing much really. Just because of Ramadan, and it was an interesting week last week. We saw all these surprises from central banks, including, of course, the Swiss National Bank was the first one to actually, the Swiss National Bank cannot live without surprises.
Yeah,
Remember that day,
yeah, of course, the assembly, of course.
2015? Yeah, that was interesting. So yeah, I mean, last week was interesting because we saw, the Swiss National Bank decided to cut interest rates, and they came up with a very dovish tone saying that their inflation expectations is substantially low. And basically, this what turned around also the dollar, because it opens the way, that actually the Federal Reserve is not the first one to cut. That was the Swiss National Bank, and since then, I mean, if you look where the market now is, basically definitely far away from where we were last week.
Exactly, and we've seen the dollar actually. They they took a big hike, especially in the past couple of days. In the past 2 weeks, reached 104.5 almost. So even we reached a high as well, 0.7 even. And now it's trending up. We're above moving averages, so the dollar gained a lot of strength in the past 2 weeks as well. And a lot of news actually happened in the past 2 weeks, especially not just on the past one. Definitely your beloved yen. There's news on the yen again.
My beloved yen. Yeah, I mean, the past few weeks it was interesting because, and one of the main reasons why is basically it's still kind of, the market is kind of like in a boring situation where we're not trending. We're basically trading within the same, also almost the same range. Maybe we are starting to trend soon, I would say, especially if we close this week. That would be 3 weeks in a row for the dollar to go up, which is basically, I mean, when it comes to price and time theory or the price and time method, this basically would be a change in the trend. So that's number one. Number two, the most important thing that was very interesting for the past few weeks, whether if it's like, FX or commodities or whatever, it was how many times the US basically revised the previous data. That was for January, that was also for February, and it was totally different. And this is basically what messed up the Fed fund future data. I mean, if you look today, now June is at 66%. At the end of last week, it was 88% after the Federal Reserve. Before the Federal Reserve, it was 50%. And also even yesterday, it was over 88%. And then I think one of the Federal Reserve members came out and say like it's too early to cut interest rates. So I think the market is basically very uncertain. Remember at the beginning of the year, it was like, yeah, we're gonna market we're basically pricing in 6 rate cuts.
Yeah, but they were talking about the end of the first quarter, they will interfere. But I don't know. I believe we explained it really well and most of our interviews and most of our, even on the previous podcast, that nothing will happen before the first half of the year.
Yeah.
So once we finish this half, things are going to become a bit more clear and we'll be able to make a better decision. The Fed is looking for more data. Now we have, as you said, some discussions about not doing an interference or not cutting the rate 3 times this year. And as well, from the market and the analysts as well in the market, they've started discussing that we might see that at the end of the quarter, like the last quarter of the year. Not we don't have to interfere in this quarter. Fed even mentioned something really important regarding the employment, which is they're willing
That
to
was
keep
epic.
them running. Yeah, so they don't mind to keep the inflation running as long as they have a proper control on the employment. So this is a really valuable information for us.
I mean, the jobs report was epic, from 365,000 to 200 and something. And I know it in percentages. So they revised the previous data. The NFP was revised down by 45%. Manufacturing was revised down by 60%. Also, the private sector was down also by 40%. So the whole revision. So imagine what if the data that they revised was actually announced back then?
Announced at that time. Yeah.
The Fed would have basically already did cut rates at some point, or not to that extent, but at least the Fed fund future would be pricing in something different.
Pressure. The pressure will be much higher.
Yeah.
And that's something that we were discussing as well the last time, that we have almost a ratio around 20% of changing that data, and even much higher than that as well. Up to 40 something. So and for a trader, what we care about, okay, for an investor, maybe the long the view, the way we look at the market is totally different than a trader. So we need to always differentiate between the two. As a trader, we don't care what's going to get revised at that time. What we care about is that data at the same second, at the same time. So it's good to understand the economy and the macro and everything is happening, what's happening around it. But at the same time, we need to take whatever the market gives us as data. So buy rumors, sell fact, eventually. Exactly what's been happening in the previous week.
I mean, we'll have to take whatever the market gave us. Remember, we were talking about oil last time in the first one, and finally, we got almost 800 pips. And some critics would say, you waited for about like 2 months for 800 pips. My answer is yes. Did some rollovers, but at the end of the day, we made 800 pips on one single trade. This is when, if the market is boring, if there's no trending market, whatever, swing trade is still not a bad idea. And that was also based on another thing, is basically, which is until today, that might be, the dollar rally. It doesn't make sense because dollars going up, yields are still going up, stocks are still going up. This relationship is basically, at some point, we will need to come back into the normalization of this relationship, which is the inverse, not an actual positive relationship. So we got, when I saw oil, and even if you look at all the other commodities, look at coca. Yesterday, $10,000 per ton. And this is a new record high. So regarding when the market is basically is uncertain, you can still. This is why I like diversification. Market is uncertain in FX, but not in commodities, not in energy. Yeah.
But But even with oil, you said you waited and then you took only 800 pips. It still didn't finish. Like the move didn't finish yet.
Oh no, I closed half of the position, not all of
Yeah,
it.
exactly. So still in the same trend. We broke even the trend and the channel up. Today, I believe on Bloomberg there was they mentioned something that analysts are looking to test the 100, or they started discussing the 100. So you started to
That
feel
is
that
correct.
again. But the beauty in trading, or the strength in trading, and whatever we're discussing, and hints that we give to the market or to the people that are attending with us, is basically we started that even much more
Before. Yeah,
before it started. So we took the whole wave and the whole move, all of it
exactly.
together. So this is where you can benefit the most. And regarding the U.S. stocks and the indices, it's been going up. But did you notice that every time we're having a new high, or we reach the high, we are breaking that high. So there's still a lot of positivity in the market.
Yeah.
I agree with whatever you said the other time regarding it's not really attractive to buy at that top, and that's something that I say as well. But at the same time, it's still the market, it's still going up, so we cannot go
I mean,
against
you'll
it.
have to deal with it the way it is. But
Exactly.
I would say on the short term, but this also at the same time, so that people would understand, it doesn't mean that we're always correct. I think earlier this morning I was almost getting stopped on my Aussie and Kiwi, on both Aussie and Kiwi. But so far, no, not yet. It might be like just a little bit below the low
Kiwi,
of today.
Kiwi,
Uh,
not New Zealand yen, right? New
no,
Zealand
no,
dollar.
not New Zealand then. I had just the Kiwi, the Aussie, Australian dollar, and the New Zealand dollar. I have longs from about 3 weeks ago. They gave me at some point about like 200 pips each, but I did not. I decided not to take them out. So I kept them. But today we almost reached the stop. So far it survived. I don't know if it's going to survive until the end of the day, or if it's going to survive until the end of the week. But even that's one thing is, you're still going to get stopped. You're not going to be making money every day. You're not going to be basically right all the time. But one thing that I look forward, or I keep looking at, is basically the trade that's going to go for 2, 3 weeks, but it will pay off instead, especially that we are currently in that kind of market where that we're still getting record highs every day. And at some point, the market might get into something called the exhaustion gap, which is basically where you keep gapping every day. And then until what time do you think that this is going to continue? So that is the one thing that I keep trying to teach, is
Fine.
basically, as much as you wait on your losses, try also to wait on your gains, and just accept the fact that markets will change every day, and at some point you might actually get stuck with multiple losses a day, or even multiple losses for few weeks even.
It's a part of our work, and basically the difference between the traders is the people that can handle that stress. That
Yeah.
stress alone is something that usually destroys any trader in the market. So if you're able to handle that, wait on your
Hmm.
losses, and at the same time wait on your winnings, this is where you start building your proper risk reward ratio, proper
True.
risk management. You're building a proper trading plan. That's one of the things that we teach as well in our workshops for the people that come to the office here in Dubai.
Hmm.
So there is a section that every single time we mention and we discuss the points that we need to focus on when you want to do your risk management, because risk management is basically the core and the main and the most important thing in trading. You can be right about the market but still lose money
Hmm.
because of your risk management, or maybe you over leverage,
True.
or you got overexposed on the market. You entered so many trades at the same
True
time.
that.
All of these stuff can affect your portfolio and destroy your portfolio as well. So
Hmm.
here the services that we give is basically we explain to the clients that they need to let's say lower a couple of their exposure, a couple of their trades, be careful about certain limits. There is a certain news that is coming up. All of these things that the traders maybe do not have the time to look at, we can assist, support them by helping them notice it before the thing hit or or before we have an issue basically in the market.
Some things you can say.
Yeah.
Yeah, I mean, and also sometimes I try to as much as possible to explain it to people. Whenever they look, advertisement or whatever online, you always look for like everybody, like some people would be saying like, my winning rate is 90%. Sometimes even if your winning rate is 90%, this 90% might be like $100, but you have traders whose winning rate is 30%, but they're making much more than the one who basically his winning rate is 90%. And people said like, how is that even possible? It's because whenever they lose little. And let me get stopped out once, twice, 3 times a day, 3 times a week, whatever. But whenever I enter a trade and it's going my way, I'm gonna keep it going. I'm gonna let it just give me as much as I can. And of course, with time, you still have to pay yourself. You still have to take some profits and stuff. But this is also this is part of the not just the risk management. It's also part of part of the emotions that we see. And this is one of the kind of like it's a very tricky game. And I'm telling you that because also my wife is a behavioral analyst. So the fact that you can control your behavior after, let's say, you get stopped out, do you enter the trade again? That would be a revenge trade. If not, oh, you're gonna wait. But is this something good or bad? It is just hard to deal with. But if you have a plan and that plan did not work, you have to work on the next plan until something goes your way.
Yeah, exactly. So there'll never be an emotional trader because that's usually that's in a really bad way. By the way, did you notice Ford? Since the last time we were discussing that there is a strong support around the 11th. So
which one, Ford?
Yeah, Ford now it's trading around 13. So that was a nice trade as well that we were discussing as well.
Oh, that's interesting. Also, gold today is something.
Different story.
Gold today is.
We have a big move today as well.
That's in.
Reaching.
Wait, that's a new record today? No.
Oh.
I mean, it's almost back to because the record is 2023.
The highest move, maybe, or the strongest move that we've seen so far for this week or the past week that happened. But we still didn't break the high. High was
no. Well, this is why I'm still kind of questioning the dollar rally. I mean, I understand why the dollar is going up over the past few days, but also again, you have stocks going up, you have yields going up, commodities going up, and the dollar's going up. That doesn't make sense.
Why the dollar is going up? Can you explain to the audience?
Well, here's the thing. First things first is basically they keep pushing against the numbers. So over the past few weeks, we saw inflation data, we saw the jobs, we saw the PPIs, manufacturing, retail sales, everything, and even GDP estimates are even lower. So this has basically increased the idea that okay, the Federal Reserve will indeed cut the rates in June and next June. However, you have the members from the Federal Reserve that keeps coming out talking to the media, and they keep saying, no, there's no rush. We need to see more data. We need to see at least another 2 months of moderate inflation. But the question is, what is moderate inflation? I mean, inflation reached at some point, we were like almost close to 5%. So what is moderate inflation means? Is it like 2%? Of course not, because the Federal Reserve will never just wait until inflation goes back to 2% and then they start cutting. They'll have to cut at least 1 meeting or 2 meetings in advance before we see that. So that shift in expectations from because last week the Federal Reserve was dovish. They did not even change anything when it comes to their inflation estimates. At least for this year, they're not expecting inflation to go back up. And this is why the dollar basically went down. The next day, the Swiss National Bank, of course, surprised us. The dollar went back up. And then the members of the Federal Reserve pushed back again regarding June. And we're not going to do that maybe in June. We need a little bit more time. I think the data will the upcoming data will basically confirm that the Federal Reserve will have to cut in June. However, this doesn't mean that the dollar is going to go down, because again, that's one thing that people needs to understand. You have to go back in history and look at when the dollar went down, when the Federal Reserve actually was cutting rates. It is almost none. But you have to understand why, because you have to look how the market basically priced in such decision in advance. And in advance means you're talking about 6 to 8 months before the actual event.
You mean after the interference?
Oh, no. The pricing of the rate cut or the pricing of the rate hike always happens before the market already. Remember last year?
What will happen after that? So
but remember last year they were raising rates
at the same time. I think a decrease in the rates.
Yes, last year they raised rates. Even when they were raising rates 75 basis point rate hike, the dollar was going down. But go back 8 months before, the dollar was soaring based on the expectation the Federal Reserve will start raising rates in this year or in 6 months or in the next 2 quarters or whatever. So that advanced pricing is always crucial for the people to understand. But something that you should not be doing is basically if you take a trade and you start talking about, but the European wants a weaker euro. Why the euro is not going down? This is not the way to look at it. That is definitely not the way to look at it, because a lot of people would come and say like, but it's good for Europe to have like a weaker euro. So and based on that, I thought a short would be good, but that's not how the market actually works. Or when they talk about also Japanese yen, because let's talk about Japanese yen a little bit now.
Yeah. Okay, we need to go back to euro and gold as well.
Yeah, we'll do that. Japanese yen is now the most crowded trade we've ever seen for years. If you talk to anybody now, everybody's going to tell you like, oh yeah, I'm short. I'm short dollar yen. In fact, I'm still short dollar yen. But it's the most crowded trade. So it's going to take some time until it actually develops, regardless whether the Bank of Japan intervenes or not. Yesterday at least they intervened verbally.
Yeah.
But this is not something that you want to deal with, basically, that you enter a trade and then you start talking about the economics of that country because you're short or because you're long and the market is against you, and then you start thinking about, okay, no, I'm right because this country needs a stronger currency, or this country needs a weaker currency because of your position. That is not the way to approach it.
How do you control your swaps? So let's say for the dollar yen, if you're short, you're paying swaps, so there's a cost for that. And eventually, then okay, it's fine. It moved down a little bit. It gave us some profit. We took the profit, and then after that, we re-entered at a better price. That's amazing. That was a good thing, and we were able to cover the swaps and all these stuff. But at the same time, now with the current situation, okay, we are toppers. We are at the highs. We're next to 152. 152 is the level what everyone is looking at, and no one wants to breach that level because eventually there are a lot of stop losses above 152. Most of the traders that I've noticed from our, what they do is they take a very short stop loss and they prefer to re-enter, let's say at 153
at a higher level.
If it goes much higher, instead of getting hit with 100 or 150 points, because they don't wait on their losses. Or maybe their exposure is not that. Their equity is not that big, so they can be able to wait. But even with that, my question is, do you take into consideration while trading the swaps, and how much would it cost me basically per month if I'm gonna keep that trade? Because if it took the Bank of Japan a decade,
another year,
or to interfere, and it's gonna take them another year to interfere, it's gonna be a big cost.
I definitely do keep it in consideration that there is a swap, depending on if I'm long or short. But my ideal trade is basically 2 weeks. That's the ideal trade, is basically 2 weeks. That's what I always look at, like 2 weeks, get out, or and then it depends on the market. But let's say as for let's say the oil, yes, I mean oil you have to roll over and you have to pay the swaps and all the stuff. But at the end of the day, I got 800 pips. Even if I'm going to pay a little bit more of swaps or a little bit more of the spread, it's still 800 pips. So no matter how much the swap would be, the 800 pips will cover them, and will cover them even more. But which asset, to me, which asset over the past 3 months moved about 800 pips within this short period of time? And I'm not talking about stocks. There are stocks, like a lot of stocks, at least Nvidia. If you look at Nvidia. But in FX, like an asset or a commodity that moved about $8 within the current situation, gold did it, silver not really, coca did it. But the thing that I can trade, considering the information that I had, let's say in January, I mean, oil for me was the ideal one. It was supposed to be 2 weeks. In 2 weeks, it gave us some like 300, I think, about 300. And then I decided, okay, well, if I'm up 300, I can close some and I can buy more. And I did not do any of that. I just kept the same thing. And bear in mind, I did not take the full risk, also the intended risk on oil. I only took literally 25% only. I still have 75%. I wanted to add it more, but I couldn't add it. There was no
Price didn't go down.
yeah, it didn't give me like a better price like that I can actually add to. So I definitely keep it in mind, the swaps, but it's not like a core calculation that I have to think about it like every day, because at the end of the day, I know if I'm going to take a loss, I'll take a loss. If I'm going to take profit, I'm definitely sure that at least the profit should be covered. Oh yeah, because most of the trades.
2 weeks, so basically the trading strategy doesn't affect you a lot. But even with that, Nour,
Not much.
What I want to mention is we have swap-free accounts as well. So now,
oh yeah, definitely,
we can support with that one. So for any trader that cannot basically or doesn't want to go into the hassle of calculating the risk regarding the swaps, or even taking a hit on the swaps if they were wrong in a week or two, we have a swap fee for 30 days as well, so they can benefit from that. So we cover those costs eventually. So I think for the ones that would like to confirm on the trade on dollar yen, they will enjoy it this month. They'll be able to enjoy it.
Well, that's good. I mean, we did not see anything yesterday. Talking about dollar yen again, yesterday there was an emergency meeting by the Ministry of Finance and the FSA and Bank of Japan. Yes. And they announced that this meeting was supposed to be at 6:15 local time in Japan. The funniest thing is that this meeting lasted for 30 minutes only. And this was supposed to be an emergency meeting, and there was no decision, zero, nothing. The only thing they did, they just came out with not even a statement. They just came out with, kind of answering the reporters, saying, I mean, what was that meeting all about? And everybody, all of them basically started saying the same thing, which is, we're monitoring FX. We're not going to tolerate speculations and all this kind of stuff. I mean, dollar yen now is basically, stopped at 150, 152, and
51.40 at the same
yeah,
level.
but it's when they announced it, yeah, it was almost 152.
Yeah.
So an emergency meeting with no decision, that doesn't make sense. So that's number one. There is a decision, but it doesn't mean that they're going to announce it now, or they're going to keep it, they're going to keep it until they actually need it. And this is something that happened also multiple times. Last time it happened back in December, you remember, I mean, it was almost 152 and then went all the way back down to 142. And that was in a matter of 8 days, I think, if I'm not mistaken. So last week, I think the last week, the last 2 weeks of December.
Yeah, 18 days. 18 days.
So and there was no intervention.
December until mid of December or end of December.
But there was no intervention there. It was just basically verbal interventions.
Yeah.
There was not an actual intervention. Now they even increased rates. They're out of the negative rates era, but the dollar yen went down because the Bank of Japan did not specify how many times there will be any kind of rate hikes. So I think still the idea of an emergency meeting without a decision, that's kind of interesting to see. But I think it's a matter of time until they intervene. Whether they're going to intervene verbally again. I think they succeeded yesterday, but doesn't mean they're going to succeed again. But it's just hard to believe that this is going to go without an actual intervention.
I believe the day that you were talking about is 7 December when it moved around 550 pips down in one day.
Yeah, let me tell you exactly that. Because because I was it's from the high of
from 147.
Oh, from November 13th. Yeah, from November 13th.
You're talking about the highest high from
until the low of December 28th.
Yeah,
that's where I was like shorting before. I was shorting from September, and it kept going up, and then I started like adding to it, and then within I think it was like 18 days, as you said, and it gave us more than enough. First, because our average at the beginning of the first trade was 147. We started shorting 147. It went all the way up to 152. Or not even 152, all but close to 152. But the last short was 150.75. So our average was well below at least I think 149 something. So went down all the way to 140. But I did close the majority of them at 142. But also I did not use the full risk, the intended full risk on Dorian too. I believe I was.
There was a risk that it breaks 152 and it goes to 155.
Yeah, well, that's why I did not use all the intended risk, because I need some to to cover a little bit. But yeah, I mean, I think it's just a matter of time until they intervened. I still believe Dorian or the yen in general will have to get some boost in the next few months, few weeks. I think that is still a possibility. Today, even the dollar was unable to hold so far.
Yeah, but do you think if we're gonna break the 152, if this happens,
I think they're gonna intervene. It looks like that's their ceiling.
That level it can be anything. It's like it's not that clear. It's not that easy to define a level after the 152. It might go crazy.
Because also all the stops are above.
Exactly.
All the stops are above it.
A lot of stop losses, as I was telling you. Most of the clients they have stop losses very near, very tight.
Yeah.
Above 152. So all the market would be basically going back and buying.
That's why it's crowded.
Yep.
This is why it's crowded, and at the same time, even if it's crowded, but it always did the same thing. That the market spikes above the 152 for a very short period of time, and then all these stops are triggered, and then you'll get the flush. This has nothing to do with brokers wants to trigger stops or whatever. This is basically just pure future markets basically trading. So,
but I think we should test the 148. 148.80 something.
I would love to. That'll be great. That would be great to see.
Just to continue trading within a certain range. Was like that.
Yeah, I mean that's the only thing. The only thing that would even today, earlier this morning, also talking about Dalian again. Nour, they came out and they put a target for Dalian. Guess what? Guess what's the target?
What's his target?
I mean, just throw a number. What's the target for Dalian from Nour?
From Bank of Nour.
Mm-hmm.
Nour Bank should be around 141 again.
Wow, that was pretty good. 140. That's
nice.
That's their target. So
yeah, because
I'm going to try to keep holding.
Of the dollar yen for the past, I don't know, let's say since 2022. 141.
Oh, it's a 5-year cycle too.
Yeah, as well. Yeah. But just if you take the year and a half that passed, so 2022, 2023, or the 2 years that already passed, between the high of 152 and the low between of 129 or even a little bit lower 127, 140 seems like a nice decent support where we retested a couple of times, and it's a nice support. It's a nice level. So
Yeah.
and it would be a nice average as well among all the data and craziness that's been happening on the market. So like that, the dollar will go back to a certain level where it makes more sense as well. And at the same time, the yen will gain more strength, and they will solve the issues of the inflation that they have, and all the issues that they have in Japan. Let me go
It's good.
back to the euro dollar. We were talking about euro
Oh,
dollar.
yeah.
We need to talk about the gold. Um, okay, you
Euro.
said something regarding euros that okay, fine. Europe needs the euro dollar to be down, or
Oh, we're talking about how traders sometimes starts to look at core economy while they're day trading.
yeah. But let's mix it up a little bit. So basically, it should go down, or basically it will support Europe if it goes down a little bit more than that. But I believe it did go down. Like if you look at the chart on the daily chart from just December this year, like 3 months back or 4 months back, we've been at 1.11, 1.1130. And since
Hmm?
that level, we revisited or retested the 1.07, and now we're trading almost near it, 1.790,
That's
0790.
Yeah,
So,
this is why it's becoming like boring, basically. We're trying to break that 109 multiple times. It failed. It
yeah.
tried the 111 also, it failed. So this is becoming kind of, lower highs and lower lows pattern, but on the extended time frames. Because weekly, if you look at the weekly chart, it's not that bad, because at the same time, there is an inverse head and shoulder
Yeah.
on the weekly. At the same time, we have we have a head and shoulder, not an inverse, on the dollar index on the weekly and the monthly chart.
Mm.
So this kind of,
Pattern, yeah.
pattern basically keeps you kind of like wondering, um, is this going to be, a fake pattern, or there must be, or
That's
is there anything that might actually happen like soon that would shift the market expectations again? That is one thing that I keep it in mind, because now, since the market is basically priced in everything when it comes to, how many rate cuts they're going to do, three. I mean, yes, 99% of the, if not more, the market basically pricing in that. So the question would be, what comes next? What is the next event that might trigger shifting expectations again? What I mean by shifting, because three rate cuts means 75 basis point, but is it actually going to be 75 basis point, or what if this is when you have to start thinking about what if inflation basically or disinflation accelerated even more. Meaning, if inflation started like to go down even further and faster than the Federal Reserve wants, will they actually cut interest rate by 25 basis point, or it might be 25 and then 50 and then 75?
raise the
That
price
would
of
be something that would be something that the market is not even pricing. Nobody's ready for that one. So I think we should definitely look, and like very soon, to start looking or start researching what is the next event that might change or shift the market expectations again, because this would be the next big trade
yes.
when the market expectation will shift.
There's a lot of things happening at the same time. If you're talking for a week, okay, that's fine. Maybe we still have almost the same data. But
Mhm.
in the next 6 months or within the next quarter and a half, we're going to start talking intensively about the election, the US. We're going to start talking about
This is why you're getting a lot of revisions. This is election year.
exactly. So basically, even if you look at the on the weekly chart, the one that you're mentioning, yes, we do have the
Mhm.
path in front of us. But would it break the neckline? Are we gonna have the fake move, or are we gonna break the neckline? That is not confirmed,
Oh
and we're
no,
still
not yet. Definitely
in the
not
same.
confirmed.
Yeah, it's still trading within the same range. So
Yeah.
still didn't go below 107,
I
106.
mean,
We didn't
even currently, it
go
looks like
below
it's a
109
failure.
or 110.
Currently, it's kind of looking like a failure also. It looks like a fake pattern, especially if we close this week anything over 104. I mean, this is time and price tells you that whenever you get 3 weeks in a row, um,
Yeah, but if it
This
closed
means that
down
it changed.
104, it's
Mhm.
it's a nice indication that basically, okay, fine, it's going to fail the pattern, but it's a nice indication that there is a big pressure on the euro, and that we have a lot of sellers in the market. We already broke 107, 106, and we were able to reach the 104, which is the previous low in October.
Yeah.
So that would be a totally different reaction. The market would react differently around these levels. Maybe a small correction and then a break below. So that would change the whole view about the euro dollar if we do that. But I
Because
think
again, who's going to cut first and how much they're going to cut?
exactly, and
Because
how portfolios.
I
So
think the ECB and the Bank of England meetings comes before the Fed in June, if I'm not mistaken. 1 second, I'll tell you. I think they are before the Fed. Yes, they are before the Fed. So that's going to be interesting to see. So if the ECB decides to, to hold rates and then wait for the Fed to confirm, that is going to be something, or that's going to be interesting, especially if you look at the Fed fund or the futures of the ECB. Currently, there's the probability for
April, right?
I mean, for April, it's only 10%. It's not something, but market is pricing in 99% chance for a rate cut in June from the ECB, and from the UK, in April it's 20% and 70% in June. So it is going to be very interesting to see how the ECB actually will react, because now also for the US, you have June is 66%, but the ECB is 98%, which explains why basically the euro has been failing to rally, is because this is the differential to in favor of the euro. So that's going to be June's still going to be huge week.
Hold our horses on euro at the moment just to see what's going to happen. We're going to break either down or up. What about? It's been a while actually. We didn't discuss gold, and gold is like
gold, yes, we have to.
In
I mean, we still have
region, and
time.
I think worldwide lately.
We still have about maybe 10, 15 minutes, I think. So, what gold?
Yeah. So gold is toppish at the moment, trading at 2,209, almost at the previous highs. It's been going up for the past minimum 6 business days so far.
Yeah, last week's candle is not that great.
Yeah.
And it's heavily overbought. But would you buy gold here?
Well, based on last week pattern or the tail
Based
that last
based
week,
on
it's a bit scary
based on the price.
There are sellers at this level, and it's obvious. So people would.
But would you buy at record high?
Make a new high. And listen, and as someone.
No. Would you buy at record high?
No, of course not. Of course not.
Okay, that's good to know.
And listen, I've said I'm long on gold. I'm someone that buys silver and gold personally. Silver especially, to be more specific.
Undervalued? Undervalued?
Yeah, exactly. That's why. So I think we should see that move eventually. The next year or two, we have to see some nice move on.
Something interesting to see.
Yeah, it would be nice, and I would rebuy as well if it's gonna go down, because remember that post that I did a poll on Instagram where I was asking, okay, fine, now the expectation of the banks is gold is gonna hit 2,500 again.
Yeah.
Right.
Oh, true.
But
yes.
the question is, are we gonna see a dip before that, or it's gonna go straight up from here? That's the question. Because historically, usually what happens is we see a nice cleanup of the market. So the market makers would like to do a nice cleanup of the market. They clean everything, hit all stop losses, and then it will go back up.
Yeah.
Same as the previous low that we hit, the 1800, 1813.
Have you ever done something that you basically go back and watch all your trades that you closed in loss and how it ended up after, like few weeks, not like days.
If you've kept them.
Majority of majority of the trades that you get stop loss at, go back, look at them.
Yeah, you retest your level. You definitely retest your level. But
Yeah.
the problem is why I'm convinced to keep the same strategy and my trading plan. Because if I didn't close that trade back then, if I didn't hit my stop loss, first of all, I wouldn't have some norms or neither terms in my trading plan, and that would ruin literally my mental state and my trading plan and my everything. So I definitely need to have that. We need to have those boundaries
Yeah.
as traders, or we go crazy. Second, every time I close a trade, I eventually look for another one because and I don't want to be.
I mean, that's what we do.
Yeah. So eventually.
That's what we do. You close one and then you look for another.
Exactly. We're still talking about trading, right?
Yeah, definitely.
Yeah.
Where can we get the recording? Oh, recording. It will be uploaded somewhere. I'm sure it's going to be most probably it's going to be on YouTube. So just keep track on social media. We're definitely going to be hosting it. Abdullah, hi, welcome. Yeah, sorry, keep going. I stopped you.
Yeah, and as well, guys, for the ones that would like to watch this, to see all our webinars, workshops, and services and activities that we're doing, you can follow our page as well. Squared Financial in English and Squared Financial Arabic and for the Arabic speakers. So you'll be able to see the next meeting or the next webinar that Nour is doing or the next workshop that we're doing here at the office. We're doing a lot of activities that you can benefit from. It's all free, just for educational purposes, and so we can benefit from this market because there are a lot of opportunities that we can benefit from, especially in this time of the year. Because I don't know,
it's elections.
We need to make money in 2024.
It's elections. It's election years. It's elections year. I still remember when the last one, 2024. Yeah, 2020. When?
Yeah, you're talking Biden. No, the one that I like the most is Hillary and Trump.
Yes, that's yeah. That was wait. That was in what 2000.
So basically 8 years back.
17. Wait, 2016.
17.
16.
Yeah. 16, 17.
I still remember when that happened and how it actually like at the beginning, market crashed overnight futures, and then by the opening bell of the next day in New York, markets were just basically soaring again. So keep that in mind because election year is basically will have a lot of catalysts to move the market. So that's going to be like very interesting. By the way, we have about maybe like I would say 10 more minutes. If you have any questions, just type it in the chat, or if you want to type it in the Q&A, also you can do that. Go ahead, Dom.
Let me add something on the election part that you were mentioning. I don't know if you noticed that as well, but that's something that I've been noticing over the years that usually the US or the citizens or the market, they support no matter which president they got. So whenever you have the election, you're going to see the stock market going up after the election. It doesn't matter if the market was preferring, especially the time where we had Trump and Hillary, because we've seen from the polls every time Trump had some positive polls, the market used to go back and to go down, and then after that, every time Hillary used to win another state, the stock market started to go up. But once Trump got elected, all the stocks, all the indices, they went up all of it. Same as what happened with Biden. So there's a full support from the US to the president, no matter from if they liked him or not, if they wanted that or not, they fully support them.
It depends also on, how much tax cuts they'll announce. Especially, I mean, especially whether Biden or Trump. But at the same time, there's a name that might be questionable, which is Michelle Obama. Although she said multiple times she's not going to run, she's not. But there's a lot of kind of like reports recently that she might enter the race in some way or form. That would be kind of an interesting catalyst to change the market sentiment. Uh, I think that might be reasonable because so far, I mean, what the logic say is like, it's going to be Trump versus Biden, and who knows what's going to happen. But what if, I don't know, what if they didn't let, or maybe Trump legal issues might not let him
Much affect his
continue the race or
but
something. So it's something. That's why I keep saying we have to look into the what ifs going forward at least for the next until June, because this is where would be the next big trade would be based on what if something in the middle, whether June, July, since the market is going just in one direction. This is when you have to take a step back, kind of like reassess before whatever things happen, because now there's nothing concerning, which is a good thing. But also, whenever it reaches that point where it's too optimistic, this is when you start to take a step, try to take a step back.
Okay, let's until we have some questions, I'm gonna ask you a couple of questions regarding if you do or you do not take such trades.
Sure. Okay. Do
okay,
or
so,
not?
Yeah. So is it a yes or no, basically? Would you?
Oh, yes, no questions.
Yeah,
Okay.
couple of questions. It's a test.
Okay.
So
Okay. Go ahead. Let's go.
So let's talk indices. We have Dow, Nasdaq, and S&P. Buy from here.
Buy from here? No.
Okay. So the same reason that we discussed already, it's already published.
Same reason, definitely.
What about Apple after the last drop and the last news, or the big news that we've had on Apple stocks?
Apple would be Apple would be a good long term, especially after after the last dip. I would say yes, if that's a yes no question.
Okay. So Apple is a yes.
That's a good dip. I mean, that was a good dip. Reasonable.
Yeah.
It wasn't that bad.
Since the top, actually.
Yeah.
It went down almost from 195 all the way to 168.
Yeah, that's a good percentage.
Yeah, percentage. We went down almost 14% from last wave, and from the top, the highest high, we went down 15.5%.
That's a pretty reasonable.
Yeah, especially for a stock like this. Okay, what about AI and EV cars? Now
EVs, I'm looking at Tesla. Tesla looks very interesting to me after the recent wave lower, and I think
80?
Yeah, I think Tesla is in a good place. It didn't go overhyped, so I would consider it. I would say after this dip, AI. I mean, I still think AI is very. There's a lot to go into, and yeah, I mean, invest in AI. I would say yes, no question, yes.
And EV cars.
EV cars. I mean,
the moment.
I mean, at the moment, yes, because the others are still not mature enough. They're still. I mean, they're still basically struggling. There's the production is not consistent, deliveries are not consistent. So until they reach that point, but it would be if you have the ability to hold for a long, long time, maybe. But Tesla is still It's still the top on top of all of them.
We discussed Neo as well the last time.
Yeah, and
So
Neo
now
is today is 5.
we're back. Yeah, we're almost 4.6 at the moment. We're
Yeah,
almost at the channel low or the trend low, the trend line.
yeah.
We just hit the trend line around these levels, around 4.4, something like that. So we hit that channel down. I don't know. I believe in that stock, and I believe it has a nice future as an investment. Keep that in mind.
Hmm.
It's an investment.
Long term is always good. That's the
Yeah,
only thing the only strategy that never failed is buy and hold throughout centuries. Buy and hold never failed.
here's the
Never.
difference. What about Bitcoin?
Yeah. Bitcoin, I mean,
Okay,
with Bitcoin, I would, here's the thing, I wouldn't buy here. That's fair.
that's a problem.
70,000. Listen, it was 37, it was 35,000 about what? Last July, if I'm not mistaken. Last July, it was like 35,000,
November,
if not less.
November, this November,
Yeah. So why
November.
would I think if I missed, yeah, if I missed the buy back then, why would I put double the risk and buy it at 70? I would still buy some other crypto. I mean, as in another example, you have, remember the crypto that we talked about last time? It was Fetch AI. So it
Yeah,
doubled from the time where we talked about it. Fetch AI is one of the crypto, and I mean, they have, according to their paper, I mean, they have kind of like very interesting project. So yeah, I mean, crypto, it is, to me, crypto is great. Crypto is a very interesting concept, and it's here to stay. But not the meme coins, or these the coins that have an unlimited circulating supply. That's the one thing that you have to just basically dig in and get more information about it. But
no, do you
yes,
still see the correlation between gold and crypto? These are the questions, the frequently questioned actually that we always
there
answer.
is there is still, because I mean, look at gold and Bitcoin.
Yeah,
Almost, the chart is almost identical. Yes, there is. And don't forget, recently, um, one of the major things that also very interesting is the well-known ho holdings of gold by the ETFs is basically going down, but the price is going up. And this is the first time where the correlation between how much the ETFs are holding gold and the price, and this is the first time where actually they're not in the same direction. ETFs are actually uh, selling their gold holdings as the price goes up. Usually
yeah.
the price
What
goes
about
up and they keep adding to it.
the Bitcoin? What about the Bitcoin and the ETF, the new ETFs?
Bitcoin ETF, man, come on, Bitcoin ETFs is still, the inflows is still high, and that's one of the reasons why. Because as far as I know, the demand on Bitcoin from the ETFs, when the ETF was listed until just about maybe 2 weeks ago or something, the demand was 10 times the production. I mean, it makes sense for for Bitcoin to spike like that. And will it go to 100,000 with the what is it called, with the supply that they have, the limited supply that will never change? I think it's reasonable. It could be.
So can we say, let's say, that people are getting out of the gold ETFs and entering something a bit more riskier at the moment and a bit more lucrative, and they take to make
I
more money?
wouldn't I wouldn't say people. I would say maybe hedge funds, maybe yes. But at the same time, Citigroup announced also they're now, like, more in custody with gold, which basically, banks were buying gold for the past few months more than ever, for whatever reason, either inflation or their policies, or high rates. It doesn't matter. But I think it's concerning when the people start talking about gold at record high. This is also, as always, we have to take a step back,
Yeah.
unfortunately. But yeah. Okay. So I guess we don't even have any questions.
Right.
Yeah, I don't see any.
I got some questions I asked you already. I got them on my phone.
Oh, that's perfect. Well, at least hopefully we did answer some of your questions. about various subjects, and I think we're going to do another one
For sure. For
at
sure.
some point. Probably, I would say, maybe probably in April. We'll definitely do another one.
After 8, I guess.
Yeah, definitely we'll have to do another one. All right. Well, thank you all for coming today and joining us for the this second episode of Squared Financial Talk Show podcast. And I hope that you guys enjoyed it. And hopefully we'll see you again in the next episode next month. I don't know when. Well, it's going to be announced within the next few weeks.
Thank you guys for attending. We'll see you soon. And keep us posted if you need anything. If you have anything in mind, any subject in mind as well, you can text us at any time. Have a nice day.
Have a good one.